Question 1. During a critical transition period where existing processes for property transfers are under review, a dispute arises regarding the enforceability of a quitclaim deed. A property owner, John, signed a quitclaim deed transferring his property to his nephew, Mark. However, months later, John claims he was under duress at the time of signing and wants to reclaim ownership. Mark, on the other hand, has already sold the property to party Susan, who was unaware of any dispute. Under real property law, which party is most likely to prevail in? A legal challenge: A. John, because he can prove he signed the deed under duress. B. Mark, because he was the rightful recipient of the quitclaim deed. C. Susan, because she is a bona fide purchaser for value without notice. D. The property reverts to the state due to the uncertainty of ownership. Answer: C. Susan, because she is a bona fide purchaser for value without notice. Explanation: this question tests the concept of bona fide purchaser (BFP) protections in real property law. A quitclaim deed conveys only whatever interest the grantor holds at the time of transfer, without any guarantees. If John was truly under duress, he could seek to void the transfer, but the key issue is subsequent ownership transfer. John's claim of option A could be valid, but it does not automatically invalidate the rights of subsequent bona fide purchaser. He must provide compelling evidence and file legal action before third party acquires the property. Mark's defense option B is weak because if the deed was obtained under duress, it could be voidable. Susan's rights as bona fide purchaser, option C, are protected because she purchased the property in good faith, for value, and without notice. Any dispute. Under recording statutes, most states follow either res notice or notice system, meaning an innocent purchaser is protected from prior defects they were unaware of. Reversion to the state, option D, is incorrect, as escheat typically occurs only when property owner dies intestate without heirs. This question highlights quitclaim deed risks, BFP protections, and the importance of timely legal action in property disputes. Question 2. In a multi-location scenario where consistency requirements for property use must be enforced, a property developer purchases a large tract of land zoned for residential use. The developer, however, wishes to build a commercial shopping center. They argue that a neighboring property within the same zoning district has already been allowed to operate a retail store under prior zoning change. Which legal argument would provide the developer the strongest chance of obtaining approval for commercial use? A. The developer can claim an easement by necessity to operate a business. B. The developer can apply for a variance, citing the prior zoning exception as precedent. C. The developer can argue for adverse possession, given the size and duration of ownership. D. The developer can assert that zoning laws cannot legally restrict commercial expansion. Answer: B. The developer can apply for a variance, citing the prior zoning exception as precedent. Explanation: this question examines land use controls, zoning variances, and legal exceptions. Easement by necessity, option A, it applies only when a landowner needs access to their property, e.g. landlocked parcels requiring a roadway but does not allow a change in land use. Variances, option B, are a legal tool for property owners seeking exceptions to zoning laws when strict application causes undue hardship. The strongest argument here is that a precedent was set with a prior zoning change. However, the developer must demonstrate why the variance is justified under local zoning board regulations. Adverse possession, option C, is inapplicable because it applies to unauthorized occupation of another's land over time, not changing zoning laws. Restricting commercial expansion, option D, is incorrect because municipalities have legal authority to impose zoning restrictions under their police power. This highlights the importance of variances in land use law, the role of boards, and how precedents impact real estate development. Question 3. While analyzing the root causes of sequential problems in real estate ownership disputes, a family discovers that their inherited farmland is subject to conflicting claims due to an old boundary discrepancy. Their neighbor has used and fenced a portion of the land for over 20 years, treating it as their own. The family seeks to reclaim this portion, arguing that it was never legally transferred. Under the principles of adverse possession, which factor is most critical in determining ownership? A. The neighbor's continued use and occupation of the land. B. The original property deed, which lists the family as the rightful owner. C. Whether the neighbor paid taxes on the disputed land during the 20-year period. D. The verbal agreement between the original owners and the neighbor. Answer A. The neighbor's continued use and occupation of the land. Explanation. This question tests adverse possession principles, doctrine that allows person to claim ownership of land if they meet specific legal criteria. The key elements of adverse possession typically include actual possession. The claimant physically occupies the land. Open and notorious. The possession is visible and obvious. Exclusive use. The claimant uses the land exclusively, not shared with the owner. Hostile to the true owner's interest. The use is without the owner's permission. Continuous for statutory period, typically 1030 years depending on state law. Option is correct because long-term open and continuous use of the land is primary requirement for adverse possession claims. Option B is incorrect because deed alone does not prevent an adverse possession claim if the original owner failed to challenge the occupation. Option C is partially relevant as some states require tax payments on the land as an additional requirement, but the lack of tax payments alone would not necessarily defeat an adverse possession claim. Option D is incorrect because verbal agreements are generally unenforceable in land transfers unless legally documented. This reinforces how property owners must actively monitor and protect their land rights and the legal requirements of adverse possession claims. Question 4. During a comprehensive review of a process that needs improvement, a real estate investment firm examines the tax benefits of property ownership. The firm is particularly interested in maximizing depreciation deductions and using tax-deferred exchanges to optimize its investment strategy. Which of the following tax-related principles allows an investor to defer capital gains tax when selling one investment property and purchasing a similar property? A. 1031 exchange. B. Homestead exemption. C. Capital gains exclusion. D. Ad valorem taxation. Answer A. 1031 exchange. Explanation. The 1031 exchange under Section 1031 of the Internal Revenue Code (ERE) allows real estate investors to defer capital gains taxes by reinvesting proceeds from the sale of a property into a like kind of property of equal or greater value. This strategy is widely used by investors seeking to grow their portfolios without the immediate tax burden. While the other options incorrect. B. Homestead exemption provides property tax relief for primary residences but does not apply to investment properties. C. Capital gains exclusion allows homeowners, not investors, to exclude up to $250,000, $500,000 for married couples of gains from taxation when selling a primary residence per see Section 121. D. Ad valorem taxation refers to property based on assessed value, unrelated to capital gains deferral. For investors, compliance with IRLs, including identifying a replacement property within 45 days and completing the exchange within 180 days, is crucial to avoid disqualification. Question 5. In a multi-location scenario where consistency requirements vary across jurisdictions, a commercial real estate developer seeks to construct a series of mixed-use properties. The developer encounters zoning laws that differ significantly from one municipality to another. Which of the following zoning mechanisms allows a property owner to request an exception from the standard zoning regulations to accommodate their specific project? A. Eminent domain. B. Non-conforming use. C. Zoning variance. D. Answer. C. Zoning variance. Explanation. A zoning variance is a special permission granted by a local zoning board that allows property use in a manner that deviates from existing zoning laws. It is typically issued when strict adherence to zoning regulations creates undue hardship for the property owner. While the other options are incorrect, A. Eminent domain refers to the government's power to take private property for public use with compensation unrelated to zoning exceptions. B. Non-conforming use applies when an existing property was legally established under previous zoning laws but does not comply with new regulations. D. Deals with the transfer of unclaimed property to the state when the owner dies without as unrelated to zoning requests. Developers must present strong justifications, e.g. land constraints, economic impact when applying for a variance as approved. Discretionary and varies by jurisdiction. Question 6. When implementing new protocols in a shared environment, a real estate brokerage firm decides to enhance its transaction process by ensuring that property titles are free of defects before closing. Which of the following legal instruments guarantees that a seller has good title and provides the most protection to a buyer? A. Quitclaim deed. B. Special warranty deed. C. General warranty deed. D. Bargain and sale deed. Answer. See General Warranty Deed explanation. A general warranty deed offers the highest level of protection to the buyer because it includes covenants that guarantee the seller has clear ownership and will defend the title against claims even from past owners. This type of deed ensures the buyer receives her property free of undisclosed encumbrances, while the other options are incorrect. A quitclaim deed transfers any interest the seller may have but provides guarantees about ownership or title defects. B. Special warranty deed guarantees clear title only during the seller's period of ownership but not prior owners. D. Bargain and sale deed implies ownership but does not guarantee clear title or protection from past claims. Title insurance is often recommended even when using general warranty deed to further protect against unforeseen claims. Question 7. During a seamless transition where continuity must be maintained, a property management firm is reviewing lease agreements to ensure tenants' rights and responsibilities are clearly outlined. Which of the following types of lease agreements requires the tenant to pay both rent and property-related expenses such as taxes, insurance, and maintenance? A. Gross lease. B. Net lease. C. Percentage lease. D. Ground lease. Answer: B. Net lease. Explanation: a net lease is a type of commercial lease in which the tenant pays a base rent plus some or all of the property's operating expenses, e.g. taxes, insurance, and maintenance. This structure benefits landlords by shifting financial responsibility to tenants, while the other options are incorrect. A. Gross lease. Tenant pays fixed rent and the landlord covers all operating expenses. C. Percentage lease. Used retail leasing where tenants pay base rent plus percentage of their sales revenue. D. Ground lease involves leasing land to tenant who typically builds on it, with ownership of improvements transferring to the landlord after the lease term. Net leases are classified into single, double, and triple net NNN leases, with NNN leases placing the most financial responsibility on tenants. Question 8. While managing a hybrid approach where timing issues arise, a real estate attorney advises a developer about the risks of failing to close a property transaction on time. Which legal principle ensures that real estate contracts specify deadlines that must be strictly adhered to? A. Statute of frauds. B. Doctrine of laches. C. Time is of the essence. D. Parole evidence rule. Answer: C. Time is of the essence. Explanation: that time is of the essence clause in real estate contracts establishes that deadlines are mandatory and failure to comply can result in contract termination or legal consequences. Courts generally enforce this clause strictly, while the other options are incorrect. A. Statute of frauds requires real estate contracts to be in writing to be enforceable but does not impose strict time limits. B. Laches applies when a party unreasonably delays enforcing their rights, leading to contract disputes. D. Parole evidence rule prevents parties from introducing oral agreements that contradict a written contract. Buyers and sellers should carefully review contract terms to avoid missing crucial deadlines that could void a deal. Question 9. In a situation where formal requirements conflict with practical implementation, a property investor attempts to claim ownership of a piece of land through continuous and unauthorized possession. Which legal doctrine allows an individual to acquire title to land without a formal purchase? A. Easement by necessity. B. Adverse possession. C. License. D. Covenant running with the land. Answer: B. Adverse possession. Explanation: adverse possession allows a person to acquire legal ownership of property by open, continuous, exclusive, hostile, and actual possession for a statutory period, varies by state, typically 530 years, while the other options are incorrect. A. Easement by necessity grants access rights to landlocked property owners but does not transfer ownership. C. License. A temporary, revocable right to land, unlike the permanent ownership from adverse possession. D. Covenant running with the land imposes property restrictions, e.g. rules, but does not involve ownership claims. Adverse possession claims must meet all legal requirements, including paying property taxes in some jurisdictions. Question 10. During a comprehensive review of the process that needs improvement, a real estate investment firm examines the risks associated with financing options. The firm wants to ensure that borrowers understand the total cost of a loan, including interest and fees, which federal law requires lenders to disclose the annual percentage rate APR and all loan costs to consumers. A. Equal Credit Opportunity Act, ECOA. B. Truth in Lending Act, TILA. C. Fair Credit Reporting Act of CRA. D. Homeowners Protection Act, HP. Answer: B. Truth in Lending Act TILA explanation. The Truth in Lending Act TILA mandates that lenders provide clear disclosure of loan terms, including the annual percentage rate, APA, finance charges, and repayment terms, ensuring borrowers fully understand the cost of credit. Why the other options are incorrect. A. ECO prevents lenders from discriminating based on race, gender, or other factors. C. If CRI regulates credit report agencies but does not require loan disclosures. D. HPA focuses on private mortgage insurance, PMI cancellation, not loan disclosures. TILA protects consumers from predatory lending practices by ensuring transparency. Question 11. In a multi-location scenario where consistency requirements vary across jurisdictions, a commercial developer is assessing floodplain regulations for a new project. Which federal agency oversees the National Flood Insurance Program, NFIP, and establishes floodplain management requirements? A. Federal Emergency Management Agency, FEMA. B. Environmental Protection Agency, EPA. C. U.S. Department of Housing and Urban Development, HUD. D. Federal Housing Administration, FHA. Answer. A. Federal Emergency Management Agency, FEMA. Explanation. FEMA manages the National Flood Insurance Program, NFIP, which helps property owners obtain flood insurance and enforces floodplain regulations to reduce flood damage. Why the other options are incorrect. B. EPA regulates environmental protection but does not oversee flood insurance. C. HUD focuses on housing policies, not flood management. D. FHA mortgage insurance but does not regulate flood zones. FEMA also publishes flood insurance rate maps, firms to guide zoning and building regulations in flood-prone areas. Question 12. When implementing new protocols in a shared environment, a property management company is ensuring compliance with fair housing laws. Which federal act prohibits housing discrimination based on race, color, religion, sex, disability, familial status, or national origin? A. Americans with Disabilities Act, ADA. B. Fair Housing Act, FHA. C. Equal Credit Opportunity Act, ECOA. D. Real Estate Settlement Procedures Act, RESPA. Answer. B. Fair Housing Act, FHA. Explanation. The Fair Housing Act, FHA, prohibits discrimination in renting, selling, and financing housing based on protected classes, race, color, religion, sex, disability, familial status, national origin. Why the other options are incorrect. The ADA covers accessibility requirements but does not regulate housing discrimination. C. ECOA prevents credit discrimination but does not cover housing. RESPA focuses on closing costs and mortgage disclosures, not fair housing. Landlords, real estate agents, and lenders must comply to avoid legal penalties. Question 13. During a seamless transition where continuity must be maintained, a real estate investor is structuring a lease that includes a percentage of the tenant's sales revenue. What type of lease is commonly used in retail settings where the landlord earns portion of the business's revenue? A. Gross lease. B. Net lease. C. Percentage lease. D. Ground lease. Answer. C. Percentage lease. Explanation. A percentage lease requires tenants, typically retailers, to pay a base rent plus a percentage of their gross sales, aligning the landlord's income with the tenant's success. Why the other options are incorrect. A. Gross lease. Tenant pays only fixed rent with landlord covering expenses. B. Net lease. Tenant pays rent plus some or all property expenses. D. Ground lease. Long-term lease of land where tenant improvements. This lease structure is common in shopping malls and encourages landlords to maintain high-traffic locations. Question 14. While managing a hybrid approach where timing issues arise, a real estate developer faces delays in a property transaction. Which contract clause legally requires parties to meet deadlines, making timing an essential element of the agreement? A. Force majeure clause. B. Time is of the essence clause. C. Contingency clause. D. Liquidated damages clause. Answer. B. Time is of the essence clause. Explanation. A time is of the essence clause states that contract deadlines must be strictly followed and failure to comply can lead to contract termination or penalties. Why the other options are incorrect. A. Force majeure clause excuses delays due to uncontrollable events. E.g. natural disasters. C. Contingency clause makes the contract dependent on certain conditions being met. D. Liquidated damages clause predetermines financial penalties for contract breaches. Courts strictly enforce this clause, making timely performance legally binding. Question 15. During a comprehensive review of a process that needs improvement, a mortgage lender is evaluating the risks of lending to high-risk borrowers. Which type of mortgage is specifically designed for borrowers with lower credit scores and requires mortgage insurance? A. Adjustable rate mortgage ARM. B. Jumbo loan. C. Federal Housing Administration FHA own. D. Reverse mortgage. Answer: C. Federal Housing Administration FHA own. Explanation: an FHA loan is insured by the government and allows borrowers with lower credit scores to qualify, but it requires mortgage insurance. Premiums met. While the other options are incorrect, ARM has interest rates that change over time, not necessarily for low credit borrowers. B. Jumbo loan covers expensive homes exceeding loan limits requiring high credit scores. D. Reverse mortgage, available only to seniors aged 62 who convert home equity into income. FHA loans are popular among first-time homebuyers due to their low down payment requirements, 3.5%. Question 16. During a comprehensive review of a process that needs improvement, a real estate firm is evaluating different property valuation methods. Which appraisal approach is most appropriate for valuing a unique property like a historic landmark? A. Sales comparison approach. B. Cost approach. C. Income approach. D. Gross rent multiplier approach. Answer: B. Cost approach. Explanation: the cost approach estimates a property's value by calculating the cost to rebuild it from scratch minus depreciation, making it ideal for unique properties. E.g. historic landmarks, churches. Why the other options are incorrect? A. Sales comparison, used for standard residential properties. C. Income approach, best for rental properties that generate income. D. Gross rent multiplier, a simpler method for valuing rental properties based on rent income. For properties without comparable sales, the cost approach provides the most accurate valuation. Question 17. In a multi-location scenario where consistency requirements vary across jurisdictions, a national real estate investment firm is assessing land use regulations. Which of the following best describes the zoning variance? A. A legal exception allowing land use that deviates from zoning laws. B. A permanent change to zoning regulations. C. A zoning rule that prohibits property development. D. A local government's right to seize property for public use. Answer: A. A legal exception allowing land use that deviates from zoning laws. Explanation: the zoning variance allows a property owner to legally bypass zoning restrictions for special circumstances. Why the other options are incorrect? B. Permanent change to zoning is describes rezoning, not a variance. C. Zoning rule prohibiting development. Some zoning laws restrict development, but variances grant exceptions. D. Eminent domain, government's right to seize property for public use, not variance. Variances must be approved by local zoning boards and often require public hearings. Question 18. When implementing new protocols in a shared environment, a property management company is ensuring compliance with rental laws. Which federal act limits the amount of security deposits a landlord can require and mandates the return of deposits within a reasonable time? A. Fair Housing Act FHA. B. Real Estate Settlement Procedures Act RESPAT. C. Residentially Based Paint Hazard Reduction Act. D. There is no federal law regulating security deposits. Answer: D. There is no federal law regulating security deposits. Explanation: security deposit regulations vary by state as there is no federal law governing security deposit limits or return timelines. While the other options are incorrect, AFHA regulates housing discrimination, not deposits. B. RESPAT deals with real estate settlements and closing costs. C. Lead-Based Paint Act requires disclosures for lead hazards. Homes built before 1978. Tenants should check state laws for security deposit limits and refund timelines. Question 19. During a seamless transition where continuity must be maintained, a real estate investor is evaluating mortgage-backed securities. Which government-sponsored entity (GC) is responsible for purchasing conventional home loans to provide liquidity in the mortgage market? A. Federal Housing Administration FHA. B. Fannie Mae. C. Ginnie Mae DUS. Department of Veterans Affairs VA. Answer: B. Fannie Mae. Explanation: Fannie Mae, Federal National Mortgage Association, buys conventional mortgages from lenders, ensuring liquidity in the housing market. Why the other options are incorrect? A. FHA insures government-backed loans, not conventional ones. C. Ginnie Mae guarantees government-backed mortgage securities, FHA and VA loans. D. VA provides loan guarantees for veterans, not market liquidity. Fannie Mae stabilizes mortgage rates and expands homeownership opportunities. Question 20. While managing a hybrid approach where timing issues arise, a property developer needs financing for a project that will be repaid when permanent financing is secured. Which type of loan is designed for short-term funding during the construction phase? A. Conventional mortgage. B. Bridge loan. C. Construction loan. D. Home equity loan. Answer: C. Construction loan. Explanation: a construction loan provides short-term financing for building a property, with funds released in phases as construction progresses. Why the other options are incorrect? A. Conventional mortgage, used for purchasing completed homes, not construction. B. Bridge loan, covers temporary financing between two property transactions. D. Home equity loan, uses a home's equity for general borrowing. Construction: once construction is complete, developers typically refinance into permanent mortgage. Question 21. During a comprehensive review of a process that needs improvement, a real estate attorney is analyzing contracts. Which of the following must be present for a real estate contract to be legally enforceable? A. Mutual agreement. B. Notarization. C. Verbal agreement. D. Title search. Answer: A. Mutual agreement. Explanation: for a real estate contract to be legally binding, it must have mutual agreement, offer an acceptance, consideration, payment or promise to pay competent parties, lawful purpose, written form. Statute of frauds applies to real estate contracts. Why the other options are incorrect? B. Notarization, required for some legal documents but not all contracts. C. Verbal agreement, not enforceable for real estate under the statute of frauds. D. Title search, important but not a requirement for contract validity. A contract missing mutual agreement is not legally binding. Question 22. In a multi-location scenario where consistency requirements vary across jurisdictions, a landlord is determining if a tenant can be evicted for non-payment. What legal action allows a landlord to remove a tenant from rental property? A. Foreclosure. B. Eviction. C. Eminent domain. D. Subrogation. Answer: B. Eviction. Explanation: an eviction is a legal process where a landlord removes a tenant for violating lease terms. G. Non-payment of rent, property damage, illegal activity. Why the other options are incorrect? A. Foreclosure involves a lender taking back a property due to mortgage default. C. Eminent domain, government seizing private property for public use. D. Subrogation, involves insurance claims, not eviction. Landlords must follow state eviction laws, which require proper notice before eviction. Question 23. During a comprehensive review of a process that needs improvement, a property management firm is evaluating different lease types. Which type of lease requires the tenant to pay a fixed rent plus some or all of the operating expenses, such as property taxes and maintenance? A. Gross lease. B. Net lease. C. Percentage lease. D. Ground lease. Answer: B. Net lease. Explanation: a net lease requires the tenant to pay a base rent plus some or all of the property's expenses, including taxes, insurance, and maintenance. Why the other options are incorrect? A. Gross lease, tenant pays fixed rent and the landlord covers expenses. C. Percentage lease, tenant pays base rent plus percentage of sales revenue, common in retail. D. Ground lease, long-term lease where tenant rents only the and builds on it. Net leases are common in commercial real estate, shifting more financial responsibility to tenants. Question 24. In a multi-location scenario where consistency requirements vary across jurisdictions, a property investor is considering an adjustable rate mortgage ARM. What is the primary risk associated with ARMs compared to fixed-rate mortgages? A. Higher initial interest rates. B. Lack of loan availability. C. Interest rate fluctuations. D. No ability to refinance. Answer: C. Interest rate fluctuations. Explanation: the biggest risk of an adjustable rate mortgage ARM is that interest rates can increase, leading to higher monthly payments. Why the other options are incorrect? A. Higher initial interest rates. ARMs often start with lower rates than fixed-rate mortgages. B. Lack of loan availability. ARMs are widely available, just like fixed-rate mortgages. D. No ability to refinance. Borrowers can refinance ARM into a fixed-rate loan. Borrowers should assess their risk tolerance before choosing an ARM. Question 25. When implementing new protocols in a shared environment, a property manager is reviewing lease agreements. Which of the following lease clauses allows a landlord to increase rent periodically based on market conditions? A. Escalation clause. B. Holdover clause. C. Subordination clause. D. Acceleration clause. Answer: A. Escalation clause. Explanation: An escalation clause allows landlords to increase rent based on inflation, property expenses, or market conditions, while the other options are incorrect. B. Holdover clause applies when a tenant stays beyond lease expiration. C. Subordination clause determines mortgage priority and foreclosure. D. Acceleration clause requires full repayment of a loan if the borrower defaults. Escalation clauses protect landlords against rising costs. Question 26. During a seamless transition where continuity must be maintained, a mortgage lender is evaluating risk factors. Which factor has the greatest influence on a borrower's mortgage interest rate? A. Location of the property. B. Borrower's credit score. C. Type of home, single family versus condo. D. Number of bedrooms in the home. Answer: B. Borrower's credit score. Explanation: borrower's credit score is the most significant factor affecting mortgage interest rates. Higher credit scores generally result in lower interest rates, while the other options are incorrect. A. Location can affect property value but not directly influence interest rates. C. Type of home affects loan eligibility but has less impact on interest rates. D. Number of bedrooms has no impact. Mortgage rates. Lenders use credit scores to assess loan risk and set interest rates accordingly. Question 27. While managing a hybrid approach where timing issues arise, a real estate developer is considering tax benefits. Which tax incentive allows investors to defer capital gains taxes when reinvesting proceeds from a sold property into a similar property? A. Capital gains deduction. B. 1031 exchange. C. Depreciation recapture. D. Tax credit for first-time home buyers. Answer: B. 1031 exchange. Explanation: a 1031 exchange, also called a like-kind exchange, lets real estate investors defer capital gains taxes by reinvesting in a similar property, while the other options are incorrect. A. Capital gains deduction. No such deduction exists. Only exclusions apply for primary residences. C. Depreciation recapture. Taxes must be paid on claimed depreciation when selling. D. First-time homebuyer tax credit was a temporary program not related to capital gains. 1031 exchanges help investors grow wealth by deferring taxes on real estate transactions. Question 28. During a comprehensive review of a process that needs improvement, a real estate broker is advising a client on closing costs. Which of the following is typically paid by the homebuyer at closing? A. Real estate commission. B. Title insurance for the lender. C. Property taxes for the seller. D. Mortgage payoff for the seller. Answer: B. Title insurance for the lender. Explanation: homebuyers typically pay for lender's title insurance, which protects the lender in case of ownership disputes, while the other options are incorrect. A. Real estate commission, paid by the seller, not the buyer. C. Property taxes. The seller usually pays any outstanding taxes. D. Mortgage payoff. The seller pays off their existing mortgage. Buyers should review the closing disclosure to understand all fees. Question 29. In a multi-location scenario where consistency requirements vary across jurisdictions, a homeowner is considering refinancing. Which of the following is a major benefit of refinancing a mortgage? A. Avoiding property taxes. B. Reducing the interest rate. C. Eliminating the need for homeowners insurance. D. Increasing the loan balance without approval. Answer: B. Reducing the interest rate. Explanation: refinancing allows homeowners to secure a lower interest rate, which can reduce monthly payments and total interest paid over time. While the other options are incorrect. A. Avoiding property taxes. Homeowners must still pay property taxes. C. Eliminating insurance. Lenders require homeowners insurance. D. Increasing the loan balance. A cash-out refinance allows this, but lender approval is required. Refinancing is most beneficial when interest rates drop or a homeowner's credit improves. Question 30. When implementing new protocols in a shared environment, a real estate investor is reviewing property ownership types. Which form of ownership involves multiple owners, but upon the death of one owner, their share automatically passes to the surviving owners? A. Tenancy in common. B. Joint tenancy. C. Sole ownership. D. Leasehold estate. Answer: B. Joint tenancy. Explanation: joint tenancy includes the right of survivorship, meaning when one owner dies, their share automatically transfers to the surviving owners, while the other options are incorrect. A. Tenancy in common. Shares are inheritable, do not automatically pass to co-owners. C. Sole ownership. Only one owner, so no co-ownership transfer applies. D. Leasehold estate involves renting property, not ownership. Joint tenancy, seamless ownership transfer without going through probate.